Hello family, thank you for tuning into this video today. Hey look, today I'm going to do a regional Queensland property market update. So I'm going to take a look at various regional Queensland hubs and diagnose what exactly is going on in these markets right now. So if you are an investor or a home buyer looking to potentially buying in regional Queensland, I think you're going to get some tremendous insight around how to potentially best navigate these markets and at the same time get an understanding as to what's going on there. So if you are looking at buying in a place like Bundaberg, Gladstone, Rockhampton, Mackay, Townsville, and Cairns, stick around. You're going to get some really good insight here today. Now, if you're a subscriber, current subscriber, welcome back and thank you again for tuning in today. If you are someone that is tuning in for the first time, my name is Troyson Bassini. I am the owner and head of research of Life Buyers Agency. So we are a regional Queensland buyers agent specialist and we service the Central Queensland and North Queensland property markets under these two brands here. So up in North Queensland, we've got Tropical Life servicing Cairns, Townsville and the broader region there, and then we've got Capricorn Life servicing the Central Queensland basin from Rockhampton to Bundaberg and everywhere in between there as well, Gladstone and Mackay included. And what we do is we generally help a lot of investors and geographically challenged buyers navigate these markets. We're on the ground, we provide buyers advocacy services, purchase, negotiation, acquisition and pre and post settlement support for anyone looking at potentially buying in any of these locations. We've done more than $250 million worth of transactions in these regions. 70% of our purchases are off market, and I like to say as a result of buying off market, a lot of our properties are also bought in isolation of competition and under market value as well. So if you feel as though you are an investor that might need potential professional help getting into these markets, feel free to reach out to us on those websites below or give us a call on that number and we can connect you up with myself or one of my team members for a chat around how we might be able to potentially get you into the market and buy you a cracking investment. Now, as part of these updates today, I'm going to be taking a sort of a high-level look or snapshot of each of those different regional hubs I mentioned before, starting with Bundaberg. So we're going to have a look at its median house price, look at some of the demand and supply side data around days on market, stock levels, inventory levels. We're going to be looking at listing volumes, and then we're going to be looking at the rental side of the market around vacancy rates and how the rental market has been tracking. So there's enough here in terms of a high-level snapshot, I believe, for you to figure out, all right, if this is the ideal time to buy or potentially sit on the sideline. So let's dive in to Bundaberg now and see what's going on in this market. So Bundaberg, Bundaberg has grown a lot over the last, 4 years. Since COVID, it's had a massive spike and then it kind of went off the radar for a lot of big buyers agencies and a lot of investors. It kind of faded away as an investment hotspot. So it hasn't necessarily been a market that's popped up a lot on various property forums, but I know Bundaberg is still a location that I think has plenty of upside. And I know people are still potentially interested in Bundaberg. They just want to understand what's going on there currently. So from a snapshot point of view for Bundaberg, we can see here right now its median house price is $591,000. Now, in comparison to all of the other regional Queensland hubs, I would say that's probably one of the more expensive markets. It's definitely up there. I'd probably say the only one it's not as expensive as right now is Cairns. So I'd say Bundaberg would almost be second on the list today as the most expensive regional hub. So Bundaberg has around over 100,000 people and a massive agricultural economy there. So it is a big market and has been very popular as well for a lot of people moving intra-regionally from the Sunshine Coast and the Gold Coast, coming up to places like Bargara, Ince Park, Corals Cove on the east coast of Bundaberg, and then in and around sort of the established parts of Bundaberg, that affordable price range between 400 to 550. I know a lot of investors have smashed that of late as well. So yeah, Bundaberg, guys, from a median house price point of view, still looking pretty affordable, I'd say, in the grand scheme of things, particularly when you start to benchmark that against capital cities. So let's have a look at how its median house price has performed year to date. So since January to this point in time, today in September. So we can see here that year to date, the median house price has grown by 8.2%. So very close to double digit growth here so far this year. From 546,000 to now 591,000, accounting for total growth this year of $45,000. So yeah, you can see $45,000 this year in terms of growth year to date, so 8.2%. So Bundaberg is definitely a market, guys, here that's still very much on the rise. So I know it fell off the radar of a lot of investors and big buyers agents as a hotspot, but as you can see here, it is still a market with plenty of growth happening there today. And I think a lot of the growth is happening still around a lot of the affordable areas like Avenel Heights, Kepnock, the Beeben, Avoca, a lot of around that 450 to 550. I still think there's a lot of good value if you can pick up properties for in that price point. I think a lot of that could jump, an extra 50, 60, 70, $80,000 in the short term as well. And I know on the east coast of Bundaberg right now, supply is in very short supply. So Bargara, Innes Park, Coral Cove, everything basically there right now. It's very hard to get anything under 650, and I know a lot of the stock that is over 700 and above are also selling very fast. So there is a lot of interest still in Bundaberg here, guys, hence why I think that median house price has surged along this year quite well, and I think it's going to continue to surge along quite nicely. And if we actually look at some of the data here now, I think it's certainly going to reflect that. So we can see here that the days on market currently has maintained its trend of 53 since January. So it's not a complete frenzy out there like where it was around 30 days when it was red hot around that COVID period. So 50 days means that most things are going under contract there within sort of the first 2 weeks, not necessarily in the first day. But again, this is on a case-by-case basis, guys. You have to remember that there are certain properties that will go to market that might go under contract straight away. So don't sit on your heels too much if you are an investor there. Just tread with caution, because there was a property today that I looked at that's on the market in Bundaberg right now in Walkerville with Michael Loader for offers over, I think he had 399, and he went up online yesterday, and I texted him today, say, hey mate, how's that tracking? And he said there's 7 offers on it already within the first couple of days. So on a case-by-case basis, things are moving very fast. So don't just be mindful of that if you are looking to buy in Bundy. You can see the stock levels are sitting at 0.2%, which is extremely tight, right, in terms of overall supply, and the inventory levels are currently sitting at 1 month. So that's really, really tight, guys, for a market with a population of over 100,000 people with more than 40,000 unique dwellings within the immediate area. To only have 0.2% of supply coming into the market is very, very low. So that low supply with high demand obviously creates that imbalance between supply and demand, and that causes that house price friction, right, in the marketplace. So naturally prices have to continue to rise when there's only 2 properties coming up in a suburb and then there's 20 buyers, right? So there's a mismatch between the two there. So stock levels are low, inventory levels are low. So from an investment point of view, if you are looking to invest in something like Bundaberg, like the data is looking very good so far with its growth rate, days on market quite low still, and stock levels very tight. We can see here that listings have increased increased 34% from 117 in January to 157 in September. So I believe it's maintained all year around that sort of 130, 120 mark throughout the year, and then it's had a small spike here in September. This naturally happens during the sort of the spring selling season as well, so that's definitely happened here in Bundaberg. Obviously, you want to see listing volumes get smaller and smaller and contract over time, and it's definitely contracted over the last couple of years now, but now I think it sort of idles between sort of low 100s to mid 100s, and I haven't really seen it hit 200 yet. But if this trend continues to rise, we might be in an environment where more and more stock is potentially coming to the market, and that could potentially slow down that growth rate as well. So we have to keep an eye on that. But overall, like, that's not a massive concern with these increases between those 2 points in time, between January and September, increasing by 34%. As I said, it's pretty much average between 100 to 150 properties per month or year. If it starts to spike any more than 150 properties, if you watch this data closely over the next couple of months, then that's where I'd probably say you might potentially start to see a slowdown here as more and more supply comes to the market and meets that demand. That slows down that median house price growth there, guys. Now, on the rental side, we can see here that the year-to-date rent has increased 4.9% from $442 to $664 per week. So the rental market is still certainly growing here, guys. And from a median rent point of view, currently sitting at $464, I think that's quite strong as well. And obviously, this is the median overall in the suburb, in the town of Bundaberg, sorry, but individual suburbs will definitely have higher than the median rents. Like, I purchased a property in Thebeban this month, a 4-bedroom, 2-bathroom brick home on 600 square meters, built in the last 20 years, and that's renting for $580 per week. So on a case-by-case basis and a suburb-by-suburb basis, you'll be getting opportunities that outperform this overall median. But again, that's still pretty good to see that the overall rental market is growing, and that growth is probably reflective on what's happening on the vacancy rate side of things as well, which we'll take a look at in a sec. But yeah, guys, rents are growing, property prices are growing, so it's starting to really tick those 2 boxes for me here in Bundaberg. And the vacancy rates we can see here. So the vacancy rate is currently sitting at 0.9%. So that vacancy rate, very tight, sitting under 1%. And that's obviously putting upward pressure on rents as well. So you wonder why rents are growing? That's exactly why there. If you want to know the reason why, it's because that vacancy rate is very, very low. And look, guys, in order for a vacancy rate to spike as well, so if you are someone that's keeping an eye on the data and you're concerned about vacancy rates potentially spiking in the future, the only thing that can potentially spike this vacancy rate going forward is a whole bunch of new supply to come to the market. I'm talking about new development like house and land packages, new apartments, townhouses, new construction that could come in and add new stock to the marketplace that's available for rent. But unfortunately, with Bundaberg, the building approvals of late as well haven't been as strong, and like most parts of the country, construction is slow, construction is pricey, and not a lot of people moving down that path. So I expect this vacancy rate to continue to remain under 1% for quite some time, and I think as a result of that, that's going to continue to put upward pressure on that rental market there to push those median rental prices up going forward in the short term, definitely in the next couple of years as well. So if you are looking at potentially investing in Bundaberg, guys, the median house price is growing, supply is low, demand is high, so that's good for short-term capital growth going forward. And then on the rental market, we have a low vacancy rate environment with growing rents, also with very little supply. So Bundaberg is still looking like a pretty good market to invest in right now, guys, based on all of this point in time data right now. All right, the next market we're going to dive into is Gladstone. So Gladstone, we can see here, Gladstone has a median house price of $632,000. And apologies, actually, I think Bundaberg probably sits number 3 on the list overall today. I think it's Cairns number 1, Gladstone, then Bundaberg. But we'll have a look as we move through this presentation today. But yeah, as you can see, it's a lot more expensive right now than Bundaberg. But what I've had a bit of trouble with the data, I've noticed that with the data that's been aggregated, I use hashtag analytics, and Agnes Waters is part of the Gladstone Regional Council. So its median house price gets bundled into the Gladstone median. I think it drags up its average overall. So like the median house price in Agnes Waters, which is a beautiful seaside town about an hour south of Gladstone, pretty much its own separate town. It's not a suburb of Gladstone, and that has a median house price of $1 million, and it's clunked in there with all the other data and has a tendency to really drag up that median. So the Gladstone median house price is 632, but I think it's more around maybe that sort of high 4s, low 5s. I think it's around that sort of 520 $1,000 mark right now. But the data, unfortunately, on hashtag analytics just sort of plunks it all together. So I'm using that median of 632, but I think the median right now in Gladstone's more around that 520. But look, guys, let's have a look at it now. So Gladstone, its median house price has grown by 12.8% this year, from 560 to 632. So a total of $72,000 worth of growth here. So going back a couple of months, if you probably would have watched the market update I did on Gladstone a few months ago, I was pretty much anticipating this to happen, a really big sort of accelerated growth phase happening in Gladstone, because the data at the time looked very, very good. Like we had a really sort of trending low day on market rate. We had supply starting to contract. We had an inventory pool that was tightening at the time. And yeah, we started to really start to see sort of price movement happening there. And this was going back, 6, 7, 8 months ago. I was saying this, and yeah, to speak to that point, it's definitely happened and eventuated in this market here. So if you want to go watch that video, there's a timestamp on one of my Gladstone videos I did, market update a couple of months ago. So feel free to jump back and look at that. But if you want to invest in Gladstone right now, then I think this is sort of a good snapshot anyway today. This brief here that I'll be running through today is enough, I think, for you to figure out what you want to do. So yeah, guys, look, it's our market on the rise, right? And it's had a crazy run year to date, growing so much in such a short period of time, and it's probably the fastest growth I've seen happen in a regional hub for quite some time. I know Rocky went pretty crazy there, this year and last year, but not at this rate. Townsville, I think, sort of come close to this, but not at this rate. Particularly over the last sort of 10 months, it hasn't done this sort of numbers. So crazy to see Gladstone, really bounce back, particularly after a couple of really lean years there. And it was a market that was in the doldrums. No one wanted to touch, and it's really started to bounce back now. I think a lot of that could be attributed to a change in its economy now. Like, its economy is very much diversified, and it's not a one trick pony town anymore. It's very heavily geared towards mining and the gas industry. The big Curtis Island development that was there many years ago really spiked a lot of the population movement and investor activity and buyer activity back then. And now that its economy has diversified quite a lot since then. It's now quite a thriving little regional hub now, and I think its property market is really starting to reflect that. And good to see Gladstone, really make a bounce back now. Sitting at 632,000 with a population base of roughly 50,000. Can I see this median house price push up a little bit further? Yes, I think it does have some capacity to keep pushing up. Obviously, I think if you are buying this market, I would buy properties under the median. So I'd be targeting the more cheaper opportunities, the more affordable suburbs where you can potentially get in and buy for like 450, 400,000. I wouldn't necessarily be buying at the top end of the market. I'll probably shy away from buying, 4-bedroom brick homes in places like New Auckland, Glen Eden, Kincora, that are around that, 550, 600,000. Now, I think there's very little growth in them going forward. I'd be buying sort of the 400, 450 opportunities in and around those same suburbs. And I think that's where the best value is in Gladstone now as we speak. So we can see here from a days on market point of view, looking at the demand and supply side data, 38 days on market, dropping 19% from 57 days in January. So we've had a massive drop there in days on market, which shows that demand has really ramped up here in Gladstone over the last 7, 8, 9 months, dropping around 19%. So demand very high, and it's exactly what you want to see for point in time data if you are looking at potentially investing in a market, is that day on market rate really dropping. But what that also means is that the market is very red hot as well. So properties are selling very fast on the market. So you have to be pretty quick. And if you try and ring any real estate agents today, right now in Gladstone, if something goes on the market today, I can guarantee you by the weekend it could be potentially under contract or have several offers, because things are going very fast. So that's probably the only downside about Gladstone. Yeah, all the data suggests that it's good, but to try and buy in it is quite difficult as well. So it's one of those markets where property goes on for offers over 550, and pretty much the best offer gets the property deal done. So it can have its pros and cons there if you're trying to buy, and it can be quite challenging. But yeah, we buy a lot of property off market in Gladstone as well and get a lot of visibility of the stock before it even comes on. So if you are someone that might need help buying in Gladstone, feel free to reach out to me and the guys as well. So days on market looking good. Stock levels 0.4%. Inventory levels sitting at 6 weeks. So stock levels super tight, 0.4%, under 1%. That's as tight as it gets, 0.4. And then inventory sitting at 3 weeks. So inventory basically means is how much weeks would it take for all the properties that are currently listed on the market to be liquidated into the buyers. So yeah, for what's on the market right now, it'll take 3 weeks for all the stock to be cleared out. So that's as tight as it comes, guys. 3 weeks. A lot of the other markets, like across the nation, that are not as hot as the regional Queensland hubs right now, they average around sort of 3-month inventory pool, whereas we're at 3 weeks in Gladstone. So that's as hot as it gets. Listings, we can see listings have spiked 17% from 110 in January to 129 in September. So not a huge jump there. January is generally a quiet period anyway, where a lot of people, coming back from holidays takes a bit of a while for the market to ramp up again. And if we look back at the listing volume, I think it's averaged around between sort of 100 to 120 listings per month anyway over the last 10 months this year in Gladstone. So looking at these listing volumes spiking, I wouldn't be too concerned about that. But obviously, the more listings that come on, could potentially be an issue for short-term capital growth. So keep an eye on that data if you are looking at investing here, guys. Rents have increased 4.8% from $357 to $456 per week. So the rental market is growing here also, and it's still a very cheap rental market, I think, as well. And I think it's not a rental market that's as expensive as places like Rocky and Mackay right now, which is good. So I think it still has plenty of wiggle room to catch up to these other regional hubs as well. But the rental market is growing here as well, guys. And we can see the vacancy rate currently sitting at 0.9%, and it's actually down from 1.2% in January. So yeah, guys, so that's a total of 27 listings less. So the vacancy rate here is certainly down as well. So moving and trending downwards is a good thing. Is what you want to see with a vacancy rate is get tighter and tighter so rents can continue to rise, and that sort of tightness in the vacancy rate market puts upward pressure on rent. So yeah, guys, look, Gladstone, if you are looking to invest in Gladstone, it's showing all the right signs of a market that's on the rise still. There's plenty of steam left in it. So the median house price is growing. It's done double-digit growth already this year. Supply levels are very low. Demand levels appear to be very high. Has a growing rental market and a compressing vacancy rate as well. All right, Rockhampton. Now let's take a look at Rockhampton. So yeah, Rockhampton has been a really popular investment hotspot for the last 12 months. Some of its suburbs have done double-digit growth over that time period as well. Markets like Frenchville, Norman Gardens, The Range have all done double-digit growth last year and have been very popular for investors and home buyers. A lot of people are still asking me about Rockhampton at the moment. We get a lot of inquiries each month about investors wanting to buy in Rockhampton, and we buy a lot of properties still in Rockhampton right now as well. So let's take a look at Rockhampton. If you are looking to buy in Rockhampton right now, or it's on your radar, then yeah, let's hope that this gives you some insight now also. So we can see here that the median house price currently is $494,000. And look, overall, guys, that's still quite, I think, an affordable median house price, particularly when you start to compare that to places like Gladstone down the road, which is a little bit more expensive. Bundaberg as well, a little bit more expensive, and then Cairns more expensive. So Rockhampton is sort of still relatively affordable. And one of the great things about Rockhampton is that it doesn't have the same volatility as markets like Gladstone. So despite Gladstone being having a much more higher median house price, Rockhampton has a way better track record. So a lot of investors actually prefer to invest in Rockhampton as opposed to Gladstone because they've always seen Rockhampton as more of an old track that just keeps churning and keeps working, whereas places like Gladstone and Mackay have historically had quite an up and down track record. So that's what's made Rockhampton really good. So its median house price isn't knocking anyone's socks off, but its median house price trend over a long period of time has been very, very good. So we can see here that year to date, its median house price has grown by 13%. So Rocky's done double-digit growth already this year, and it's grown from 437% to 494%. So a total of $57,000 in growth. So look, guys, yeah, Rockhampton is still very much surging along by the looks of things, even though it's had quite a good run last year and even the year before as well. It still appears to be a market on the rise. And when you look at it, that for sub $500,000 price point is still very affordable, and a lot of people that are investing in home buyers are all sort of still operating in this market because it sits well and truly under that 550 median still then. So I think that's in itself putting a lot of upward pressure on this house price going forward. And I think what's also dragging up this median house price now is a lot of the more expensive suburbs properties are really starting to push up there. So the Range, Norman Gardens, Frenchville, like a lot of those well-located, good brick houses or good brick and weatherboard homes are pushing up into the 600s now. So I think that in itself is dragging up the median house price overall. From an investment point of view, I think the more blue chip suburbs in Rockhampton, it's very hard to find good deals there now under 550. I think you have to spend more than 550 now to get into more of the blue chip suburbs. But I think it's starting to really open up opportunities in some of these bridesmaid suburbs that neighbour the more blue chip areas of Rockhampton. So I think there's opportunity in places like Coongal where it intersects with Frenchville. I think that there's opportunity in markets like Park Avenue where it intersects with Norman Gardens, and I think there's opportunity around markets like Kawana as well. I think it could be a great up and coming suburb as well, with plenty of room for growth. And then West Rockhampton on the south side where it intersects with the Range. So I think there's still a lot of good buy opportunity in certain suburbs in Rockhampton. So if you are looking at investing in Rockhampton, put some of those suburbs on your shortlist because that's where we're smashed in right now as well. And yeah, as you can see, all of this point in time data around supply and demand looks strong as well. So days on market currently sitting at 29 days, and it's actually dropped slightly from January. So the days on market has contracted a little bit over that period, but it looks like it's maintained that trend over the last 12 months. So 29 days, guys, that's very red hot. So trying to buy anything in Rockhampton right now, most things are going under contract within the first couple of days. So if you are investing for the first time in somewhere like Rockhampton, you got to be pretty fast with your offers, and you got to be on the ball when things come to market and try and jag those as soon as possible. And in markets like this, it's generally the best offer gets the deal done. So you have to really be aware of some of the price trends, because what I noticed a lot of the agents are doing in Rockhampton now is I would call it underquoting. So you just have to be mindful of what the price trends are to ensure that when you go to put in your offer, you're on the ball there with the price point that the property would sell for based on the price trends that are happening in the marketplace. For example, I put an offer in on a property last week in Rockhampton, and it was for offers over 499, and I put an offer in for 570. So it was $70,000 over the price guide, because that's why I knew the property would sell around that price point. But even there, I was unsuccessful. So there's other people bidding in the marketplace that are paying much more. So you could be easily tricked into property going on the market for offers over 499 and offering 510. That's not going to work, guys. So you just really need to be considerate of those price trends. Look at those comparable sales and really benchmark where you believe the value sits and the price point sits, because there is a lot of underquoting happening in the marketplace here, unfortunately, in Rockhampton. So we can see here stock levels are very, very tight as well, 0.2%, and inventory sitting at 2 weeks. So the stock levels and inventory levels are a lot tighter here in Rockhampton than it is in Gladstone and Bundy as well. So stock levels, day on market, very tight. So demand high, supply very, very low. And we can see here listings have fell as well from January at 119 to now 96 in September. So there's been like a total of 30 or so less opportunities for purchase now this time around. So listing volumes is going down and demand is remaining strong. Obviously, that's going to put that upward pressure on prices. So for me, like from a demand and supply point of view, you can see why that median house price has had double-digit growth this year. And at 495, I think that's still got plenty of wiggle room to grow there, guys. In those suburbs I mentioned before, I think they're going to be the ones that outperform though going forward. Let's have a look at the rental market. Rental market looks like it's surging along also. So year to date rents have increased by 4.8% from $435 dollars per week to 456. So rents are rising, and I think the vacancy rate might be attributed to that. So we can see here the vacancy rate currently sitting at 1.3%, and that's down from 1.5% in January. So the vacancy rate is down as well when compared to these points in time. But I know throughout certain stages of the year that vacancy rate has definitely fell below 0% as well. So that looks to be the overall trend in terms of the vacancy rate in Rockhampton is around that 1% or under, and it's maintained that for quite a long period of time. So with that said, I think the year-to-date rent has increased as a result, but also I think it has a lot of steam in it to keep growing as well going forward as that vacancy rate remains rather tight. And again, I don't see a lot of new construction happening in and around Rocky to put upward pressure on that vacancy rate to push it up even further. I don't think that's happening as much. And then when you look at these median rents, I think the rents overall are quite strong in Rocky when compared to places like Townsville. I think Townsville probably has the weakest rents overall when compared to all these other regional hubs. But 450 on average is quite good. I purchased a property last month for 485 in a suburb called Coongal, and that's renting at 560 per week or something along those lines. So you can still get properties for rent as well, much more higher than this average. And I think the yields are sitting generally around that sort of 5.5 to 6% for properties in Rocky, which is pretty strong. So yeah, guys, if you are looking to invest in Rocky, like the numbers are very, very juicy here. Really low supply levels, strong demand levels, listings are dropping, rents are rising, vacancy rates are remaining relatively stable as well. All right, Mac City. Let's have a look at Mac City, Mac Daddy City. See how this one has been performing of late. So yeah, look, guys, Mackay. I'm smashing Mackay at the moment. I'm very bullish on Mackay. I think it's a town now that is not a one-trick pony town as what it once was. I think it's a very sort of diversified regional hub now, and one of the things that I like about Mackay that it might have over Rockhampton right now is that it's closer to the water, so you have a lot of that lifestyle amenity too. So Mackay could kind of be a big sort of regional lifestyle location as well, similar to what Cairns and Townsville are like, given that it sits right on the coast. But yeah, Mackay has had a bad run, over the last decade. Like, it hasn't done a lot, but that's by and large because it was highly dependent on the coal basin there. And I'm not saying that it's not still dependent on the coal basin. I'm saying now the economy is diversified enough now where it has a bunch of other pillars as well, which gives it a much more stronger backbone than just being sort of a one-trick pony town. And that's hence why I've been very bullish on Mackay as well, because I also see a lot of good value around particularly that sub 550 price point in a lot of the established areas of Mackay. So yeah, Mackay, look, you can see here that its median house price $573,000, and it's year to date. So median house price year to date has grown by 12.8%. So similar to Rockhampton, it's also had double-digit growth here. Now we can see it's a market very much on the rise, and it's grown from 532,000 to 573,000. So a total of $41,000 in capital growth in this year alone. And to be honest, guys, I'm not surprised. So I'm not surprised. I've definitely started to see this happening in Mackay towards late last year. The data started to really look strong and it was really starting to come together for Mackay, and now we're starting to really see the data reflect that right now in terms of how it's tracked over the last 10 months. So that median house price has done some really good things. I still don't mind that median house price. Like it's definitely very close to $600,000 now, but going forward, I still think even in the well-located areas, like a lot of the blue chip brick homes in the well-located areas are still, I think, relatively affordable. Like you can probably get most brick homes in the well-located suburbs now for high fives, low sixes, and I think majority of them I think can push up into the low 700, 750 in the next coming years. And I think obviously the upper end of the market will continue to pull away as well and chug away at that median, pulling it up. I'm talking about properties that are 800 to $1 million. I think Mackay's had a relatively soft underbelly for the high end of the market, but I think it's going to be a market where the high end is really going to start to take off going forward, because I still think that the majority of people haven't really catched on to Mackay as being a big lifestyle destination. Now, a lot of the lifestyle buyers have pushed into Yeppoon, Bargara, and Bundaberg and up around Early Beach, and not a lot have pushed into Mackay. So I think places like Mackay East, Bocasia, Shoal Point, Hay Point, I think have a lot of upside potential going forward for the high end of the market. I think that can really take off. Um, I'm not buying brick homes in Mackay anymore around that sort of $600,000 price point. The stuff that I'm buying is sort of the older established stock where I still think there is some good value to and some potential to make money around that 500 to 400 to sort of mid fives around East Mackay, South Mackay, North Mackay. I've been buying around there, Andergrove, West Mackay, all of those established areas, sort of away from where the flood zone pockets are. I think that's where some really good opportunity in Mackay is right now, where a lot of those properties I still think they have $100 to $150,000 worth of growth left in them. And yeah, so that's where I'm seeing sort of a lot of the value. So yeah, guys, feel free to have a look at any of those suburbs as well. All the data looks very good at a suburb level for many of those as well. But yeah, guys, you can see Mackay, has definitely been on the rise over the last 10 months this year, doing double-digit growth, and we can see why here. So days on market very, very low, and it's dropped 33% from 39 days to 26 days. So it was sitting at 39 in January, and it's now sitting at 26. So we've had a really big sort of ramp up in demand happen here over the last 10 months in Mackay. So that's really starting to paint a picture as to why that median house price has done double-digit growth this year. We can see stock levels sitting at 0.2% and inventory sitting at 2 weeks. So this is even also on par almost with Rockhampton in terms of how the demand looks and how the supply looks. So very, very tight here. And I was speaking to an agent the other day. I was doing on our stock run looking for opportunities this week, and he said, there are about 600 agents in Mackay, and there was only like I think about 100 or 200 properties available for purchase, and there's even an imbalance between the amount of listings and agents, which was funny, and that's happening all across the regional Queensland right now. There's more agents than there is properties to sell, and unfortunately, so I'm not too sure how many of those can sustain their businesses even now going forward without a rent roll. They're subsidising their costs. So yeah, stock levels extremely low, guys. 0.2%. What Mackay is 150,000, 170,000 plus people there within the immediate region. So to only have 0.2% of properties available for purchase just goes to show that, yeah, it's a very, very tight market, and all that stock will be cleared out, the ones that are on the market right now, in 2 weeks. So that from an inventory point of view, very tight as well. And you can see here listings have decreased 19% from January. So yeah, it's currently it was 164 in January and now 133 in September. So that's what a drop in around 30 or so properties there less. So the supply is starting to really, really go down, and that's really started to push that day on market lower and lower as well. So supply low, demand high in Mackay, guys, and a median house price that's rising. So the data is looking very, very strong. From a rental point of view, it's increased. Rents have increased so far this year by 5.5%, from 490 in January to 517 in September. So yeah, guys, the rental market's growing. The listing volumes are going down. The median house price is going. The demand is really, really high. So it's starting to really paint a picture here as to why that median house price has done what it has, guys. And I've been very bullish on Mackay by and large because I do think it's not a one-trick pony town anymore. But I think Mackay probably out of all of the different regional Queensland hubs have the best value under 550 right now, and it also has the best yield. So the rents are really strong there relative to the purchase price. So you can get a $450,000 house, and that could be renting for $500 or more per week. Whereas that same house, you put that in somewhere like Townsville, Rocky, Bundy, you might be looking at sort of sub $500 per week rent. So I'm liking Mackay because I see value in the purchase price and really strong rents there. So you get that really nice juicy yield at the same time. And then look, vacancy rate 0.7%. So, and that's down from 1% in January. So about 18 less listings right now than there was in January. So it's a rental market that's been contracting as well from a vacancy rate point of view, and that's obviously driving up that median rent there now as well. And that median, I know 4-bedroom, 2-bathroom houses in Bocasia, Rural View, Blacks Beach, Shoal Point, Andergrove, they're like $750, $800 per week now, minimum for 4-bedroom, 2-bathroom brick home, and that's the middle of the market, and then the lower end of the market is more around that 550, and then the upper end of the market is around that $800 to $1,000 per week. So I think that median could be a little bit stronger, and it's going to be a lot more higher, I'd say, going forward, as well as we see more and more properties start to push up with their median rents to around that $600 to $750 per week. So yeah, guys, if you are looking to buy in Mackay, look, like the data all looks very solid here as well. And as I said, I'm very bullish on Mackay also right now. All right, moving further north, Townsville. Good old Townsville, Brownsville, home of the North Queensland Cowboys. I was pretty gutted being a Cowboys supporter that they bowed out of the 2024 Premiership race to the Cronulla Sharks. Pretty gutted about that, but that's a conversation for another day. Townsville, look, guys, it's been a very, very big hotspot right now for investors, buyers, agents. It's been one that's made a lot of noise, made a lot of headlines, and I think it's caught a lot of people's attention. And I think a lot of people might be tuning into this video today, wanting to get some insight about Townsville as well to see if that it's good for them to potentially buy right now. So I'm gonna run through Townsville now for you guys as well. But look, I know Townsville's having a really good run right now, but how I've always looked at Townsville having this run right now, I'm not calling it a boom. I'm more calling it a correction. I think Townsville has just underperformed so much for the last decade that I think it's just a market now correcting itself to where it should be, and then I think after this correction it's going to go on another boom. So if you can get it now while it's correcting itself to where I think it should be, you're going to make money, and then after it corrects itself it's going to continue to surge along, and I think there's plenty of upside in Townsville, and that's why I've been very bullish on Townsville, because one, I think it's a correction, and then two, after the correction I think there's more growth in the marketplace as well. And the reason why I call it a correction is because it's been underperformed for so long. Its median house price was only a couple of years ago around that $400,000, when it should have been around $600 by then at that point in time, but it just hadn't really got there, and there's not a lot that's been happening in that immediate market to cause that to happen. And now I think it's just had such a huge and accelerated correction where it's almost there around that 600,000. I think then from there going forward, I think between 600 to 800 is where it could also get the median house price, I believe, over the next sort of 3 years in Townsville. So we can see here that the median house price is $536,000 right now, and year-to-date median house price has grown by 12.8% in Townsville from $481,000 to $536,000. $36,000, so a total of $57,000 in capital growth as well. So yeah, double-digit growth, similar to Rocky and Mackay. Townsville's also appear to be surging along. And look, as I said, I think that median house price is more of it's corrected median house price, so it's correcting itself to where I think it should be around that $600,000. So I think even in the short term, I think this median house price still has a lot of wiggle room to push up to around that 620, I believe, because Cairns down the road is already there, and Townsville's like the bigger capital city than Cairns, right? It has an extra 40, 50,000 people, so it naturally should be the biggest and most expensive regional hub in terms of its median house price. So I think that median house price in the short term has a lot of wiggle room in it to push up. All of the blue chip areas of Townsville, like the Kerwins, the Mount Louises, the Douglas, the Dahlias, Annandales, majority of their stock now is all sort of in the low 600, mid 600. So it's probably hard to get anything with a decent yield around the blue chip areas. But in saying that, I think there's still plenty of other opportunity outside some of the blue chip areas in Townsville where you can still potentially get in at a much more lower purchase price. Because one of the things that I'm finding with Townsville is the prices have accelerated so much in such a short period of time that the rental market hasn't been able to keep up. So the yields aren't as great right now. So you might be getting a property for $550, but it might only be renting currently right now for $470 per week with an existing tenant in there with an existing lease. So it doesn't make that yield any good. I'm finding majority of the properties that have an existing tenant in there, the yields are around sort of low fives, and then stuff that you get vacant and you can get a tenant in paying current market rent are around that sort of mid five, so around 5.5%. Very hard to get 6% yield in Townsville right now, just with the rental market haven't pushed up as much as places like Townsville, Mackay, Bundaberg, where you're getting really premium rents. I think around 600 to 650 is the top end of the market right now. In Townsville, where I think Townsville should be the top end of the market should be $750, $800 for median rents per week. So yeah, I still think there's other opportunity in Townsville to buy in some of the bridesmaid suburbs where you can get in at a much lower purchase price and get a much more juicier rental yield relative to that purchase price. We just put one under contract in a suburb called Durigan for $520. That was a 1 acre block. We could subdivide that into 4 lots. And that's kind of around that sort of mid 5% yield as well. So there are still a lot of good opportunities around Townsville. You have to, I think, move into some of the older established areas where the entry price is a lot more affordable. So places like Durigan, I think it has good value. Places like Woolgaroo, parts of Condon, parts of Kelso, I think offer some scope there as well. And then obviously some of the older established areas of around Aikenvale, Heatley, Cranebrook, I think have some good value for money also. So yeah, guys, looking at all the data now for Townsville, like days on market, sitting at 24 days. That's dropped 35% from 37 in January. So 24 down from 37. Just goes to show the demand has really ramped up here in Townsville over the course of this year. So demand is really, really strong. And then as you can see here, stock levels have really started to contract now as well, sitting at 0.3% and inventory sitting at 3 weeks. Sorry. So stock levels and inventory levels very tight here as well. Almost on par with Mackay and Rocky. Not as tight, but still for a city the size of Townsville to have 0.3% and 3 weeks worth of inventory is crazy, right? Because Townsville has over 200,000 people in terms of its population. A lot bigger than Rocky, a lot bigger than Bundy, a lot bigger than Mackay. So those stock levels relative to the population base is very, very tight, guys. So that's a good thing for Townsville. And as I said at the start of the presentation, the average, for inventory levels, like across the country is generally around, for a balanced market, not a hot market, is around 3 months. But you have places like Townsville that are sitting at 3 weeks. So, there is opportunity here to make money potentially as an investor still with the data showing signs like this. So days on market, demand looking good, supply looking very low. So demand strong, supply low. You can see that the listing volumes have decreased as well over this period from by 2.5% from 276 down to 269. So not a massive variation there in the listing volume or decrease. I think Townsville, a couple of years ago, the listing volume was sitting around 300, 400 a month, and now it's really tapered down to averaging around that sort of 250 to 280 per month now. So it's kind of rolling around that. I think in the next 1.5 years, we'll start to see the listing volume drop, I think, below 200, I would say, in the next 6 to 8 months. I wouldn't be surprised if we start to see a 1, like around that sort of 190, 180, as less and less supply comes to the market going forward. One thing about Townsville, though, and that's probably one of the upsides about Townsville, that it does have upside in terms of like providing supply to the market for people that need it, but probably not necessarily a good upside for investors, is that there is still a lot of new supply, coming to the market in and around Townsville as well. So a lot of new house and land packages still happening. So I think the market will still be injected with a little bit of new supply going forward. Is that enough to sort of, oversaturate the market? I don't think so. I think there'll still be a massive imbalance there between the two, but Townsville does have a pipeline of new supply in places like Birdell, in Bowley Plains, Bushland Beach. They're pumping out, about a property every 6 weeks, is from what I've been told. There's a property being pumped out every 6 weeks at scale in a lot of these places. So yeah, guys, that looks good. Rental market data. We can see here that the rents have increased by 5.5% from 590 to 517 per week. So that's a good thing for Townsville. As I said, the rents have been pretty lazy in Townsville. We've had an accelerated price growth in terms of its median house price, and rents haven't necessarily caught up as much, but we're starting to really see rental growth happening now as well. And I think what's going to really surge this rental market a lot higher in the short term is there's going to be a flurry of new people coming in now to join the Defence Force as well. I think there's about 400 new Defence Force personnel coming to the Army Barrack base in Townsville in December. So there's a whole new brigade starting, and that's obviously those people are obviously going to flood into the local rental market, and I think that's going to certainly send the market into a bit of a frenzy there as well. And rents are going to really start to spike a lot, I believe, in Townsville. And when you have these guys coming in that work for the government, majority of their rents are subsidised as well. So I can see rents, reaching as high as $800 per week in Townsville over the next 12 months. I wouldn't be surprised if that's happening at all. So I think in the short term, the rental yields aren't as juicy. It's very hard to get sort of above 6%, but I think if you can ride it out for the next 12 months, I think the rental market is really starting to start to ramp up, and you're going to be getting a minimum of 6% yield 12 months time from now. And you can see here now that vacancy rates, has contracted as well from 1.6% down to 1.2%. So since January, there's been a total of 43 less listings. So yeah, rental market is really starting to get tighter and tighter. I think as that starts to happen more, that's going to push up that median rent overall in Townsville. As I said, when a lot of the Army personnel are going to be inbound, I think that's going to just send the market crazy, and it's going to be very, very good time for investors, and probably not necessarily a good time if you're looking to invest in somewhere like Townsville. So yeah, guys, look, Townsville looking very good. As I said, it's been a popular, hotspot. I see this market as more of a correction than anything. I still think that median house price has a lot of wiggle room to push up to sort of 650, I believe, in the short term. I still see a lot of good value in the older established suburbs in Townsville between the price points of 450 to 550. Very hard to get into blue chip as well. And yeah, all the point in time data looks good as well. Supply is low, demand is very high. Now, the lucky last market that we're going to dive in today is Cairns. So Cairns up there in tropical North Queensland, beautiful Cairns. Look, Cairns, ever since COVID, well, particularly during COVID, Cairns went bananas, and then it had a bit of a slowdown, and obviously it had a flood there at the start of the year, and a lot of people were kind of sitting on their heels, wondering what was going on with Cairns, particularly investors. And yeah, I think this update here is going to be quite fitting to sort of see what's exactly happened in Cairns since the flood back in December last year. Now, we can see here that the Kansas median house price is $644,000. And look, this makes it, I think, the most expensive regional hub. I think it's neck and neck with Gladstone there at the moment. But as I said, I think Gladstone's median house price is not a true reflection of its actual median because it's dragged up by Agnes Waters. I think Cairns right now is the most expensive regional hub from Bundaberg through to Cairns. So yeah, sitting at 644, and when we compare that to Townsville, what that's about $100,000 more. Comparing that to Mackay, similar. Comparing that to Rockhampton, about $150,000 more, and comparing that to Bundy, about $60,000-$70,000 more there. So Cairns right now is sitting up there as the sort of top dog alone right now. And sitting at 644, look, I'm not surprised that it's hit that number. Cairns is a beautiful location. Obviously, has a big lifestyle market there, so that's been one of those things I think that's been really pushing the market median house price to what it is today. The places like Palm Cove, Trinity Beach, Clifton Beach have been really popular for that lifestyle market. I know during COVID they smashed the northern beaches, and now I think supply is that low that those markets are still rising and obviously putting upward pressure on that median house price. In addition to that, Cairns had a flood back in December as well. A lot of parts of Cairns was flooded, and that obviously sent the market into a bit of a spiral there in the short term. A lot of people that wanted to invest in Cairns didn't really know what to do or what was going on. I know right now Cairns probably still has about 1,000 displaced families living sort of in temporary accommodation while their properties are going through the insurance claim process, renovations being fixed up, etc. So that's a bit of an issue right now happening in Cairns. And I know one of the big things with Cairns right now and why that median house price is soaring is that there's been pretty tight supply levels. So we'll jump into the supply levels, but pretty much where a lot of the flood didn't occur, a lot of the local buyers started to flock to a lot of those suburbs, and that's caused a lot of those suburbs to spike also. So 644 guys overall, I think that has still plenty of wiggle room, I think, to push up. I think that can get to 800. I think the Cairns median house price can get to $800,000 over the next 3 to 4 years easily, I think. And we can see here that the median house price this year, despite the flood, has grown by 5.2%. So from $612,000, it's grown to $644,000. So a total of $32,000 there. So the market is still on the rise, and this is despite a flood. And as I said, I think the flood really put a rocket up a lot of the Cairns locals. I think they really got a shock as to some of these areas that haven't flooded for so long eventually flooded, like some of the really nice residential areas like Holloways Beach, Caravonica, Camarunga, places even on the northern beaches around Palm Cove and Clifton Beach, Kawara Beach, were flooded, and these are areas that historically never flooded. And I think that really scares a lot of local buyers now, and a lot of local buyers, I believe, are pushing into some of the other suburbs that weren't affected at all from the floods recently. So markets on the south side, I believe, from pretty much Bayview Heights all the way through to Gordonvale, we've seen a massive surge in median house price growth in a lot of those south side suburbs in Cairns. But I still see, this median house price pushing up. In terms of where I'm buying in Cairns, I still see some really good value around Mount Sheridan, White Rock, Bayview Heights, parts of Gordonvale, parts of Bentley Park, where you can get in for sort of that sort of low 600s, high 500s, buying sort of those sort of properties. And then obviously for those blue chip clients that I represent with budgets of up to $1 million or 800 to $1 million, we're looking at the Cairns Northern Beaches markets like Clifton Beach, Palm Cove, and then some of the really, really blue chip areas around the inner middle ring around Brinsmead, Rennledge, and Edge Hill, etc. Another market that's also on the rise, I think that could be a great sort of market between that $600,000 to $800,000 price point is Stratford and Freshwater as well. I think there's some good value suburbs right now. So we can see here some of the data for Cairns, is still looking very strong despite that massive flood event back in December. So days on market still very low, sitting around 33 days currently, and it's pretty much remained around 30 days all year. So that just tells me that things are selling in Cairns like within the first week or so of them going onto the market. So again, if you are looking at investing in this market, just tread with caution and be very quick with your offer and your process. I put an offer in on a property in Cairns last week as well, and I missed out as it went under multiple offers, and there was a lot of bidders with this one. And yeah, as a result of that, people are paying well and truly over what the purchase price is. So be mindful now when you're buying in Cairns is that following the price trends is very, very important, because if you're not in tune with how prices are trending, when you go to put in your offer, you're going to be way off the mark there and you're going to be missing out. It's going to take you a couple of properties before you figure out, oh, I need to offer $20,000, $30,000 over that listing price if I want to be even in the race. So just have a look at those price trends, guys, because what's happening in Cairns now, yeah, people are paying $20,000, $30,000, up to $80,000 more on every listing that comes onto the market there, given that supply is very low also. So we can see here that stock levels are sitting at 0.4% and inventory sitting at 1 month. So we have demand that's remained strong and steady for pretty much the course of the whole year, and now stock levels, still idling very low, under 1%, and inventory levels around that 1 month as well. So demand is high, supply is low, and it's still a nice recipe there for that ongoing capital growth. We can see here that listing volumes has remained the same since January as well. So they're averaging around 200 properties a month. I know historically Cairns used to average around 500, 600 properties a month, and it's sort of, contracted down to a point in time now where it's averaging around 200 per month. But even that is very, very low, because there's about, 800 real estate agents in Cairns, and only, 210 properties coming available each month for purchase. So yeah, very, very low levels of supply there. So it has all the right ingredients here to suggest that the market is going to continue to rise, which is a good thing, particularly if you are looking to invest in this market. The rental side of the market looks very tight now also, guys. And overall, rents are looking solid as well. And as you can see here, the year-to-date rent has, increased 1.2% from 565 to 572. So I really like Cairns as well, because despite there being really good accelerated price growth over the last couple of years, the rents have also kept up with it as well. So the yields are always sort of very good, in line with the median house price. You can always sort of get a minimum of sort of 5.5% on your yield, particularly for those sort of sub 650k purchases. So that's one of the good things that I like about Cairns, is that the rental market is solid, and you can see here that's as a result of this vacancy rate as well being super tight. So the vacancy rate is currently sitting at 0.8%, and that's dropped from 1.2% in January. So there was a small spike in January. It's generally sat around 1%, and then it's taken another dip. So what that equates to in terms of the amount of listings or less listings is 52 less properties currently available right now in September than there was in January. So the Cairns rental market looks to be good in terms of the supply side of the market. Listing volumes, inventory levels seems to be very low. Days on market, very strong. The market is hot and heated, so high demand, low supply, and then obviously that's resulted in this median house price growing as well. 5.2%, not huge growth like what we've seen in Mackay, Townsville, and Rockhampton, but nonetheless, off the back of a flood, Cairns has done some really good numbers. And I'm still very bullish on this median house price, I think, to get to 800,000 over the next couple of years, and then the best value I'm seeing again, I think, is all of the south side suburbs between sort of sub 600. Still think if you can pick up something in there, I think that's where the best opportunities lie in Cairns. So yeah, guys, if you are looking to buy in Cairns, the data is looking pretty good right now. All right, guys, we've come to the end of the presentation. That's our sweep of the regional Queensland property market. I generally take a more deep dive into each of these individual markets, and I will be doing that in the coming weeks and months as well as we revisit a lot of these markets. But that was today just more of a high-level snapshot of what's going on right now, what are some of the trends, what's the point in time data saying, and all of that is designed to help you navigate that market. In terms of navigating the market, if you feel as though you need some help navigating the market, again, my name is Troy Simbassini. I am the owner and head of research of Life Buyers Agency. We've got Capricorn Life in Central Queensland. We can get you into the Central Queensland property market, Mackay, Rocky, Gladstone and Bundaberg. And we've got Tropical Life up in North Queensland, Cairns, Townsville and the surrounding regions there as well. You can find us on that website. Give us a call on that number. We might be able to potentially get you into the market and add value to your investment journey. But cheers, guys. Thank you for tuning in. I really hope you got some value. Thanks a lot, family, and I'll see you guys on the next video. Cheers.